Thank you very much. Good morning, ladies and gentlemen. It's a pleasure to be here talking about fintech in Africa. Let's just see if the clicker works. It does. Just at the end of last year at McKinsey and Company, we commissioned a piece of research looking at what the landscape was for fintechs across the continent. There was a lot of excitement and a lot of optimism around the industry. And the name of this report was called Fintech in Africa, It's the End of the Beginning. And I'm going to share a few excerpts from that to guide you into the discussion later on. We've seen across the continent that financial services has completely transformed, and we've seen the way people are using financial services look very, very different. The example I like to give is my grandmother, who is 85, always pings me if I try to give her money every month, and she always sends me a note on WhatsApp now telling me that she hasn't seen her alert. This was very, it's very, very different from when I used to give her cash envelopes. So now my grandma does not expect cash envelopes, she expects an alert in her phone. We've seen actually across a number of countries the penetration of fintech increasing significantly. When you compare a couple of countries such as Nigeria, Ghana, and Kenya, you see that the penetration of fintech revenues, which is essentially all revenues that are driven from fintech-like activities over the financial services revenues across the continent, across the markets, we see them going from anything between 10 to 12 to 12 to 15%. This is significantly above what we've seen in other markets, and this is due to the fact that in Africa, fintech is very, very different, right? We have mobile operators participating in fintechs. You have your traditional banking institutions also launching their fintechs, and you have the disruptors. So there's quite a penetration of fintechs across the continent. The third point that we will make, and I think this is very, very relevant when you think about the context of Silicon Valley Bank, is that fintechs are actually increasingly facing some of the same challenges that we've seen in other markets. So for example, there is a pressure to scale. Now VCs are not talking about how many customers you have, investors are not talking about how many customers you have. People are asking you, what is your path to profitability? Do you have positive unit economics? The second one is compliance and regulatory pressure. 5 years ago, you wouldn't see the amount of scrutiny, the amount of discussions in this industry with regulators that you see today. And you've seen certain actions across some markets where you see regulators are taking this very, very seriously. And again, the question for me is, how do we spark the right kinds of dialogues across all parties on the table? The third part is professionalizing with growth. A lot of these fintechs are becoming increasingly systemic. It's no longer somebody sitting in someone's garage or someone sitting in a one-man room. They're actually proper offices. So how do you make sure that they are professionalizing with growth? Again, this becomes increasingly important as you think about the collaboration with more established players in the industry. Overall, we think that financial services revenues are expected to grow by 9% until 2025 to about 230 billion, and fintechs will be at the heart of this disruption. Ooh. So when we say fintech, what does this mean, right? What does this mean? We have so many different verticals. We have, on this chart, we have 9 verticals starting from very, very simple cash in, cash out, wallet type, all the way to more sophisticated types of services such as blockchain, wealth management, and so on and so forth. Across Africa, we see that the predominant number of fintechs are focused on payments, they're focused on mobile money, they're focused on sort of the left-hand side. We're seeing a few more moving towards the right-hand side of this picture with wealth management, with insurance, and so on. As the market matures, the question is, how much do we see moving in this direction? There was a conversation, I think, earlier, just now about the fintech funding. It has dropped over the last 12 months, but I think it's also worth looking at it in perspective. Over the last 6 years, we've seen fintech funding grow at 18 times what we've seen in the baseline. And this is also in the context, I remember in 2022 when we're looking at the numbers where fintech funding was dropping across other regions. Africa still continued to have a little bit of an uptick. So as we go forward, given the fact that funding is becoming very, very limited, I think the question is, how do we build companies that are focused on value versus valuation? In terms of where we see the opportunity, we think that revenue could grow by 8x by 2027 if the rest of Africa resembles some of our other exemplary markets such as Nigeria, Ghana, and Kenya. We think we could grow around 8x in 2027. We've talked about, and I think the speakers previously spoke about some of the difficulties that fintechs face in this environment. The first really is around regulation, and you can see this when you speak to founders. They talk about the difficulty in expanding across the continent because you're speaking to 54 different regulators, and you need to try and understand in each different market what is happening. The other thing people talk about is also regulatory uncertainty, because sometimes regulations come out very, very quickly and they change very, very quickly. The second one is around navigating an uncertain environment. We've talked that we know what's happening in our big markets, especially around our macroeconomics. The third one, which a lot of fintechs, especially in my home market, Nigeria, are talking about, is this thing around corporate governance and ensuring that they have the proper foundations to grow and scale. And then finally, managing scarcity. We've talked about it in terms of scarcity of funding, but the other part that is also important to note is scarcity of talent. We're increasingly competing not only in a country scale, not only on a continent scale, but actually globally. So I can sit in Accra and be serving a client in Silicon Valley. So thinking through how companies deal with that. Finally, just to usher the conversation around collaboration with banks, I think this is one untapped area. People always ask me, who do I think is going to win the game? Is it going to be the telcos? Is it going to be the banks? Is it going to be the fintechs? I say our starting base is very, very low. Only 10% of payments in Africa is digitized. 10% of payments in Africa is digitized. So I don't think the question of should be who's going to win. I think the question is how do we collaborate and how do we come together to really expand the pie? So in terms of incumbents and fintechs, we've sort of highlighted 3 areas. One is building talent and training them so that we have enough people to help grow our companies. And then also just in terms of collaborating to build a stable ecosystem. For example, ensuring that, fintech, I see sometimes fintechs and banks competing for the same customer. The question is, how do you collaborate to make sure that you can reach people who have not been reached? So those are just a few thoughts that we wanted to put together for you to have as we go into the panel discussion. Thank you very much.
Mayowa, thank you very much. That certainly does help to set the stage for the discussion that we're just about to have in the next 40 minutes or so. I'd like to introduce my panelists and bring them up to the stage one by one, starting by the Minister for Digital Economy and Transformation here in the Republic of Togo, Cina LAWSON. Thank you very much for your time. Also joining us on stage, Richmond BASSEY. He's the CEO and co-founder of Bamboo. We'll also be having a conversation with Mansa NETTEY. She's the CEO of Standard Chartered Ghana. Meagan Rabe is a Senior Director, Fintech Management, Sub-Saharan Africa at Visa. And we'll also have GALABE. She's Executive Committee member at Ejara. Thank you very much for your time. So please join us on stage. Okay, so since the conversation really is focusing on disruption, it's a bit of a theme in this conversation. I want to start with the focus on the fintechs that are represented on the panel at the moment. I'm going to start with you, Richmond and Kunta. We've had this surge, right, in inflation. I want to pick up with where we left the conversation in Meagan. Inflation has gone up. Currencies are much, much weaker across all of the markets that you operate in. What has the response by clients on the platforms, that you're both a part of been like? Are people still investing? Has there been a surge in inflation? I'm curious to know how people are responding to these adverse economic environments.
So by default, Bamboo is built to allow Africans diversify their investment portfolios. And given all that's been happening, the positive with our users at Bamboo is that many of them have been protected from the currency devaluation because they've been able to invest away from the local currency. But also we see that what the kind of behavior when you look at the data is that our users are more careful about what they're investing in. They are more cautious about asset classes they are investing in. We've seen that a lot of users have now started investing in a lot of ETFs and fixed returns. We've also seen an appetite for large cap stocks that have very good historic performance. So it's good that we see that Bamboo allows you to diversify your portfolio like that, but the pressures are also very visible in the data and how it's affecting investor behavior.
Kunta, is it the same? Are you seeing similar trends with Ejara?
Thank you very much. Ejara, to answer your question, I would like to remind us of why Ejara was created in the first place. It was to, first of all, answer the problem of inflation that the CEMAC region experienced in the early 90s when France devaluated the French CFA, cut it in half. Families suffered, the economy was really down, people struggled, but there was nobody to throw a lifeline and to help them hang on it. So they assumed the positions of a victim and struggled through the realities and where we are today. The innovation in the tech space with the coming of the blockchain technology, provided us with a rare opportunity to level the playing field. I would say blockchain, but the cryptocurrency use case with Bitcoin, and all the other cryptocurrencies. If I'm in Cameroon or I'm in Senegal or in East Africa, wherever, or in France, and I have a Bitcoin, and the price of dollar or Bitcoin goes up, if I'm in one village in Togo, the price of Bitcoin remains the same. If I'm in France, it remains the same. I would say that what we preach is that tech has come to level the playing field so nobody is a victim when inflation happens. And today, on the wallet, people have the opportunity to be able to access these assets and hold them in a non-custodial wallet, so there is no risk of them losing it. But we've also democratized, access to savings by tokenizing treasury bonds and making them available for the masses. When rich corporations, financial institutions, the elite class, invest in treasury bonds to secure their resources, what happens to the masses who are actually I would say, the heartbeat of every economy? Today, a farmer, a taxi driver, a motorbike rider can actually buy treasury bonds and hold them to maturity and also benefit from it. So leveling the playing field is how we've approached it, and we are answering the question of inflation.
Okay, I want to move the conversation onto the questions around partnerships, right? So I'm going to start with the traditional financial institutions on the panel before coming to Minister Lawson for this one. But Meagan and NETTEY, the last 10 years, right? In the last 10 years, the conversation between fintechs and banks and the framing of that conversation has always been a very adversarial one, right? The banks would be like, who are these fintech guys? Why are they here? You know, they're not walking into the room with suits. They're not fitting into our country club environment. That's certainly how it started out in Kenya. The conversations there were hilarious. But as we move into 2024, has that changed? Are we now talking more about partnerships, investment, rather than this adversarial us versus them attitude that we saw in the last decade? Is that your experience?
I guess, you know, clearly looking at the fact that we are at a financial industry summit and a large part of the audience are tech companies shows you that partnerships with traditional, you know, financial institutions and fintechs is the way forward. You know, you look at the CEO of Richmond and I were having a conversation earlier, and I was teasing him that, you know, Standard Chartered Bank is big in wealth management. And I said, oh, you are a competitor? And he said, no, we are prospective partners. And I think that is the mindset that we need to carry forward. You've seen that, and you've talked about, you know, the fact that the scarcity in funding, you know, in the fintech space. But there's so much opportunity across the continent to partner with banks, to partner with governments, you know, and the thing about fintechs is that they are very adept at looking at solutions to Africa's problems, and Africa has a myriad of problems, and fintechs are extremely adept at doing that. And so banks have come to realize that there is so much potential to partner with these fintechs. I'll give you an example of Ghana, my home country, where, you know, obviously, given that our economies are largely informal, the government struggles with tax collection. So what in a bid to try and digitize the economy a lot more, the government of Ghana partnered with 3 fintechs and banks to come up with an e-collection platform to improve, you know, tax collection. So many examples. We are partnering with a fintech whereby we're thinking of, so the central bank, a lot of countries are rolling out e-currencies, digital currencies. And recently, the Central Bank of Ghana invited, you know, companies, institutions to participate in a hackathon. And we have partnered with the fintech to provide a solution very similar to what she described in terms of using blockchain technology to democratize, you know, access to T-bills. So huge opportunities, and I think that's the future.
Meagan?
Great, thank you. Good morning, everybody. So I think what's very important is to know that payments is a local business, that you have to be on the street, you have to understand the payment. And one of the big pain points that we as Visa identified is the time to revenue for fintechs. So from when I first meet a fintech with an idea to by the time they first earn their first dollar is usually about 12 to 18 months if you're lucky. And if you can think about that cash burn, that's an enormous amount that goes into that period. So at Visa, one of the things that we are doing is looking at partnerships where we look at, of course, partnering with the regulators, the banks who will ultimately be the BIN sponsors, and third-party processors. And one of the success stories that we've seen is if we are able to integrate directly to the third-party processor, who in turn integrates to the bank, and then the fintech just has to integrate to a front end, you can reduce that time to revenue from 18 months to 3 months. And this is what we're seeing on the ground. And you can imagine, much to the conversation earlier, those lessons that we need to learn, we can learn faster and react faster without this cash burn. So to answer the question, partnerships is critically important.
Minister Lawson, setting the rules of the road is probably the challenge that a lot of regulators, a lot of ministries are going to have to sort of figure out along the way. And in some cases, we've learned the hard way. Yeah, you have instances where the argument was, do we need fintechs to be backstopped by banks? Should they be able to operate by themselves? And sorting that out, we have very different answers, right, in different parts of the continent. So how are you approaching this brave new world here in Togo?
So, hello everyone. I'm very happy to be here today. I would say that this question is from a government perspective. There is I would say one person missing from this panel, which would be the central bank. It's important because in the French-speaking CFA zone, the central bank has a huge role to play. And when there's a panel on partnerships, the real question should be, what kind of partnerships between the central bank and fintechs? In the central bank universe, in the CFA zone, do you have relationship with fintechs? Because at the end of the day, as governments, we have to follow the rules set by central banks, and from our perspective, obviously, we want to push mobile banking. Togo has a little bit less than a 60% mobile money penetration, and all our digital transformation strategy is built around improving inclusion. But having said that, we also have to follow the rules of the central bank, and so the pace that we will digitize payment will be set by what the central bank regulation says. But there is, from a government perspective, there is a process, and there are a few steps that we have undertaken as a country. The first is biometric ID for all our citizens. It's important when you think about payment, fintechs, to think also about identity and give unique numbering to all our citizens. And I would say that there is a great example of that, which is India, when they deployed biometric ID. So Togo, as a country, we decided that this would be our path to improve inclusion, including financial inclusion. So because
that significantly helps with KYC processes, right?
Exactly.
That the banks and the fintechs
exactly. So what we did with biometric ID was that when we were designing the project, we worked very closely with banks to make sure that it fit all the KYC regulations. So that was one. And in the back of our mind was obviously supporting the whole of partnerships between banks, fintechs, and governments. The other thing is the digital transformation of payments within governments. I think that a lot of the conversations that are happening we can support because a lot of our needs can be provided by fintechs. But again, it forces us to think about regulation because we need an environment, a framework to function together, to work together. And oftentimes, from our perspective, this framework should be provided by the central banks. And so we want to partner, we want to be able to outsource some of the issues that we face with regards to collecting tax, with regards to making payments or developing, tokens, for example. We don't have to always function using cash or even digital cash, but what kind of frameworks exist in our part of the world to enable this type of payments. So I think these are the type of conversations we need to have. and of course include the central bank within these conversations.
Indeed, and I want to come to specific examples of how, in the past, companies have had sort of navigate these extra legal questions. Richmond, I want to start with you, because back in 2021, there was an interesting dispute, right, between the SEC, the CBN, and firms like yours, Bamboo. And at the time, the argument basically from these two institutions was that, well, your operations are not technically legal, but they're also not technically illegal, right? Because this is a classic example of tech, right? You produce a product that existing legislation simply has not catered for, has not imagined. How is that sorted out, and what lessons can you offer to all of us from that event?
Thank you very much. So that has been sorted out now. Bamboo is licensed by the SEC in Nigeria as a digital sub-broker serving multiple brokers. And what that means is that we can partner with traditional brokerage firms and financial institutions, onboard them on our infrastructure, and provide them investment and brokerage services. And the journey to get there wasn't a smooth one, as you've referenced. We initially rolled out our platform in partnership with a local broker in Nigeria, which also underpins the importance of partnership, right? And one thing that is important to also note is having the different points of view, the point of view of the operators, the point of view of the regulators. Regulators are very important for our ecosystem, for our financial industry, for consumer protection, to maintain standards and drive and those standards. But it's also important to note that for our financial system, for our markets to get deeper and get wider, for us to be able to serve more customers and unlock more enterprise value, we do need technology innovation. We do need the innovation side of things. And the innovation will always be ahead of the law. And that's the reality. So the issue has been...
How do you codify blockchain into law?
Exactly.
Right? How do you set standards for blockchain? Is it something built on Ethereum? Is it something built on something else? How do you even put that into law?
Yeah. The real issue, though, has been the manner of approach. And the manner of approach, the heavy hammer type approach, will stifle innovation. And what that does, it stifles growth, it stifles more value to be unlocked. I think what is important between innovators and regulators is collaboration, is being able to have melting points of data and knowledge sharing and information sharing and frameworks, like the minister has said, that allows for collaboration, that allows for this kind of information to flow and collaboration to flow.
So companies have to be proactive. Is that your experience as well, Kente? You have to be proactive with your regulators and your ministers?
Indeed. I just stand by Richmond, because taking the example of tokenizing treasury bonds, Ejara pioneered it in the CIMAC region. Regulators had no idea what blockchain was, or maybe they pretended, but they say blockchain is not real, it's just a myth, it's a concept that is far-fetched. Ejara said, okay, we are here, we have a wallet, the company is legalized, it's registered as a regular company. But to take, our solution further, or to address the very reason for why we existed in the first place, we say we are going to experiment this. We tokenized treasury bonds, but before doing that, we needed to have those bonds in order to tokenize. We went to asset management companies. Nobody will work with Ejara.
Like,
we went to banks. Exactly.
Why are you asking us to buy bonds on your behalf?
Exactly. We went to banks. They said no. We said what to do. Ejara created a subsidiary, Makeda Asset Management, got everything that was required in terms of paperwork, got those bonds, and made them available via the Ejara applications. It stirred up chaos. The central bank was on our necks, that's BASSEY. COSUMA, the regulators, were on our neck. But what we did while we were thinking through was create a panel for regulators. So when they came, we showed them that they can actually see how this happens in the background. There is no bond that would be sold or distributed on the Ejara platform without its equivalent in the bank. And Ejara has no custody of this because it is Makeda's custody bank, IBEA, that has custody of it. So whenever a client buys a fraction, maybe 1,000 francs, 2,000 francs of a bond, the Makeda account is debited and the client's account credited, and it happens with the bank. So we have the bank involved, we have the regulators involved, we have the fintech, and we have the masses, I would say the population that are being served. And the interests that are promised by the traditional financial institutions, so that they are banks on treasury bonds or their asset management companies, is the same on the platform. So, you know, collaboration is the way to go.
Nettie, do you want to weigh in on this?
I was just going to say that that's a great example of collaboration, and I think ultimately it's giving the customers value, you know, and addressing a problem, which is, you know, having a huge percentage of an unbanked population. So great example, you know.
Minister Lawson, I'd like to get your perspective on what we're hearing here, because it sounds like the key ingredients here would be, you know, being very proactive, right, from the fintech side, from the bank side, saying, we have this idea, we want to execute. Some of this might be essentially outside the bounds of law, but this is how we think this can work, which, from my perspective, it seems like the big issue here is getting to a point where the culture from government side, from the fintech side, from the bank side is saying, let's experiment and see how this works.
Yeah, so few things. Number one, I'm very impressed with this journey, because it is a journey, and I realize how hard it must have been, you know.
And expensive.
Expensive, and you being forced to think through issues of, you know, from the regulatory standpoint, from the central bank standpoint, from everybody's standpoint, actually. So it is hard. In Togo, I would say, I imagine it's even harder for fintechs, actually. So we have a law in preparation, a Digital Transformation Act, in which we want to introduce sandboxes, regulatory sandboxes, because I think that's the only way to make it happen. Because otherwise, like I say, we don't have a framework. So people come to us with great ideas, but you know, we are the Ministry of Digital Transformation. You have to convince the Ministry of Finance, who really is going to be looking at regulation, because it's a lot of risks for, you know, end users. So you can't just play because you're interested in innovating. You also have to be extremely careful. So number one, we need to create this environment, and through regulatory sandboxes. The other thing is that one of the things we struggle with is to identify which fintechs are sound and which are just, you know, which are there to stay. Because we do have few issues that fintechs can help, you know, solve, but we don't have a, it's very hard to identify, like I say, very sound fintechs. You know, these are startups you have to entrust with issues that affect a whole, you know, huge parts of government and society, and you're the one, you know, contracting with them. So how do you organize yourself for this type of partnerships? And within the CFA franc zone, there's also the requirement for these fintechs to have partnerships with banks. So we will tend to look at who their banking partners are to, for this to give us an indication of whether or not they're sound, if that makes sense.
Or if there's essentially getting a backstop layer, right? In the event that something goes wrong, clients' funds are safe.
Something like that, but I think it also has to do with, again, regulation.
Indeed. Meagan, you want to weigh in?
Yes, so I think again, if we look at how Visa operates in this space, what we've recently done is we've launched an accelerator program to exactly help a fintech go through this journey. And what we're doing there is we actually first and foremost understanding the value to the customer that the fintech's going to operate in. We help them engage with the regulators. So we, as Visa, have a government engagement team. And again, like I said, payments is a local business, so it's engaging locally. And then from there, we've got open APIs of over 90 APIs that we can sandbox with a fintech, and that's easily accessible. And what we do through that is we coach and nurture the fintechs to get to a point of growing their business, even how to pitch to investors, and partnering with banks. So we've got a target of which banks that we partner with across the continent. So instead of a fintech knocking on every door of every bank trying to get a meeting, we will introduce the fintech to the bank. So really starting at grassroots and building up.
Don't you run into the, and I guess in some cases this might not always apply, but don't you run into this argument, this counter argument sometimes from fintech, so they'll be like, yeah, but how do I know that this isn't A, setting me up for a future acquisition, or B, why should I play by, for lack of a better word, Visa's rules, right? Why am I playing within this sandbox whose boundaries have been defined by Visa? Because I might not necessarily want to plug in to your payment system. I may not necessarily want to partner with a bank on the back end, which is what some regulators may expect. So how do you manage that culture clash?
That's a fantastic question, because one of the things that people think Visa is a card. And I have this conversation on a daily basis. We've got over 900 financial products, from currency cloud to B2B Connect, which is how to move funds on a distributed ledger. So the Visa world is much, much more than the Visa in your pocket that the rap artists sing about. So to answer the question, it's about education, and to say to the respective fintech, these are the products, opportunities that are here available to you, and they aim to make your life easier. They're not aimed to say these are the rules that you have to comply with.
I want to move the question, because we're essentially coming towards the end of it, to the question around data localization. It came up in some of the sessions yesterday, and I know in your annual report, in Visa's annual report last year, you also flagged it essentially as a business risk, right? Because some of the central bankers, some of the policymakers, Minister LAWSON Spears across Africa will say, okay, Richmond's got this fantastic product, but where is this data going? Is it being held in Nigeria? Is it being held in Ghana? Who has custody of it? Is it a bank? Is it within the Fintech service? Is it being held in a cloud service somewhere in the United States? How are you approaching that problem across Africa?
So what we're doing is we're engaging with regulator market by market, and Visa actually supports localization in many aspects, because we understand it solves a lot of the privacy restraints and controls that are currently flowing. What we're currently doing, and I spoke about B2B Connect, is we're actually adjusting our products to make sure that we can adjust to localization. B2B Connect is a Forex product, which actually uses a distributed ledger to make sure that the data is stored locally. That's an example. So Visa is taking a very strategic approach, and any new product and development that we look at takes localization into account.
I want to take the same question to the fintechs and to NETTEY as well, and Stanchart Ghana. How are you approaching that data localization challenge? Because, like some of the products that Richmond, for example, is offering, right? I'm buying something in the United States. The transaction might be occurring from a bank in Kenya. Who holds the data, and how are you navigating through data protection acts in all these different countries?
So, I mean, it's an evolving, solution. And I think that for us, data protection being a regulated institution, it's really top of mind for us. And it's I guess, given that we're an emerging market bank and we are present in a number of markets, Asia, Africa, Middle East, how then do we handle the data of our clients across all these markets? And it's, and within all these markets, we have different, regulators in all these markets, and keeping up with the regulations on data is quite a challenge, but it really is a focus area for us. And data, as everybody knows, is the future. How then do we use data in a way that we are protecting our customers' interests? So it's an interesting space and one that we pay close attention to.
Richmond, do you know it?
So for us, we just benchmark to local data laws and craft our internal data policies to meet those laws and to match them. And what we see is that increasingly we have to introduce data roles at the company. We also have to allow the way that we handle customer data match the local law. Like in Nigeria, there's the NDPR that we benchmark to, and then we'd really have data tests. We have external audits for our data and how our data is handled. But what we ensure to do is that, again, we use our tech to ensure that the security of customer data is safe, and our customers know that their data with us is safe.
It does raise a cost of compliance, though, for you, doesn't it? Because you have to essentially comply with multiple laws across multiple
jurisdictions. It does raise the cost of compliance, and that's, again, talking about the rising cost of even doing business. But because we're a regulated business, because this is our core cost structure for our business, and that's what we have to do. Yeah.
So I have few comments. Number one, when it comes to the continent, not all the countries have very good data centers. So that's, the physical infrastructure may not be there. But I also think that policies need to evolve. I've been looking, and in Togo we've been looking at regulations that were crafted in other parts of the world around the notion of data embassies. Could we have Togolese data stored in another country, but have convention agreements with this country so that nobody would be able to access this data? There's a lot of thinking, because yes, you did mention the costs of doing business. I don't think it's a viable option for, especially a startup, to have to look into regulation of each country and data policy of this particular country. I don't know how you do that, because it's a lot of work, and so I think that from a public policy standpoint, it's for us to rethink how we can ensure that the data of our citizens is protected somewhere with regulations such as, could we have data embassies? Could we have a policy that says that if you host the data of anybody who is not from the country, we can't access this data? I think these are this is the future of how we should think of data policies. So I would say this is a bit the thinking we have, and we've seen it elsewhere, namely in Europe, but not in all of Europe. Even in Europe, these are very innovative way of looking and of thinking of data storage. So
perhaps Quinta and Richmond might end up creating a data custodian business at some point.
Yes, we actually think of it. We recently expanded to France after obtaining the SUN license from AMF as the digital service provider, which is a huge milestone. But then it also came with, data compliance, and we knew that we had to tackle that market differently, approach it in terms of data management, in terms of storage, in terms of how we even manipulate it, differently. But then within CIMAC and the African markets, I think it's a lot different. So yes, Richmond's concerned about different data policies for different markets. We have to constantly adjust to it if you want to operate within those those markets, but hoping that, as Her Excellency the Minister said, that we would have in the future, maybe the embassies, like she said, that we don't have to probably refer to France, refer to the US, refer to Asia, you know, or South Africa, North Africa, and all that. So we can have a central data management system and policies protecting users, of course.
Indeed. Minister LAWSON, you get the last word on this, because I remember last year when we were in this same location, one of the things that you spoke about, although it was slightly in passing, because the panel was on crypto mostly, was, you know, how do we solve the challenge of trying to figure out, from a public policy perspective, who needs social grant support in the event of a crisis like COVID? How do we apply algorithms that, say, Richmond may have developed, that Stanchart may have access to, that, you know, Ejara may have access to? How do we apply this tech to solving public policy problems? And Togo's done some interesting work on that front. So
Yes.
Tell us about that.
So during the pandemic, we used artificial intelligence to prioritize beneficiaries of financial aid. And it opened an avenue for us in terms of the way we looked at, first of all, building databases, because we did not have these databases, so we had to use AI and other, you know, satellite imagery and so on. But then now, when we think of data and building databases, we say, okay, we need to go and work with all the other ministries to ensure that the way the data is collected is sound so that we can apply them in the future. The other thing is, and I see a lot of people entering the room, so the other thing is really about using AI for data, for credit scoring. Again, so these are new areas for us. The commitment we have is to apply them, especially in social protection, because one thing is that we know that we're spending a lot of money. We want to make sure that we do it in a way that can leverage technology and, in particular, AI. So far, we've been working with the US, for example, and we're very, very aware that these are capabilities that we need to have, you know, on the. And so training becomes very important. How do we train our people to be able to actually manipulate with the algorithm by themselves and not with the support of other countries? But it's a journey, so we're working towards this journey.
All right, I should point out to our audience, one of the reasons why you're seeing a fair bit of security around is partly because of the next session. We're going to have a conversation with Herbert Wigways, the CEO of Access Holdings, and His Excellency, the President of Togo, will be in for that session. So I do need to wrap up in the next 2 minutes or so. I'm going to give each of my panelists, 30 seconds to sum up where you're seeing the future of collaboration between fintechs on one hand and banks on the other, and of course regulators as well. In 30 seconds, Quinta, let's start with you.
Okay, so regulatory framework, the regulatory sandbox is the way to go. Fintechs will be daring, or maybe we tech companies will think before regulation will adjust to it, because regulation has not mastered the extent to which tech can push or drive an economy. And tech or fintechs are leading the way. Follow them, work close with them, listen to them, and listen. When you listen to them, they will tell you, okay, this is how this is done, this is how this is done. Then you can, as a regulator, implement probably laws and legislation that will control, their activities. So there is room for partnership. We are not competing. Your output could be just my raw material, and then we are serving the market after all.
Meagan?
So I would say it's about communication. So yes, as we've said, the regulations are going to take time, and in most of our markets there's an absence or silence of regulation. And so instead of having the fear of not complying, have the open communications. Make sure you're engaging with Visa, make sure you're engaging with third-party processors, the banks, and the regulators, and using the channel of communication. And to answer the question that was on the screen, is partnerships here to solve the golden era? My closing mark is The golden era is just the start. Let's move to the diamond era.
So for me, it's huge opportunities on the continent, and I think that the Africa Free Trade Area is one big example as to how we can get companies to scale, payments across borders, regulators to collaborate, huge opportunity for collaboration, and Africa Free Trade Area is in my view, is one huge opportunity that we should all take advantage of.
And hopefully that data custodian business gets built at some point by the time we're here next year. Richmond.
Well, I think that for Africa to experience further economic growth, I mean, we're talking about moving to trillion-dollar economies, right? For that to happen, we need innovation. We need to use technology to leapfrog and solve problems in ways that, you know, we have not seen before. I mean, in America, for example, you see that we are maybe backward with technology driving certain industries like wealth creation. But with technology that is available today, Africa and its many challenges can leapfrog growth into its future. And we all have to play an active role. Regulators have to play an active role with innovation, with attracting and positioning themselves to attract innovation, to create an environment where operators and innovators can feel like they can communicate and provide solutions to the deepest challenges that we have. And I think operators as well, like was said, the communication, the ability to share data, and I think it is in that kind of relationship, almost incestuous relationship, that we can see new frontiers, economic frontiers that's unlocked for Africa.
Minister LAWSON, you got to close this session out.
So, as a policymaker, I would say the framework is important, but when I also hear a lot of the conversations happening here, I'm thinking we need to be trained. So I don't think the public sector really knows the potential of fintechs and how much these tools can help us solve our pressing issues. So I don't know if it's communication, I don't know if it's a bit of communication, it's partnerships, but it's maybe for us to be trained to better understand these tools. So that would be, the most important issue that we need to solve.
So civil servants need to start thinking a bit more like startups, adopting that risk-taking approach.
Maybe not, but it's just about understanding, because they don't need, actually we don't need to think like startups. We need to understand that, I wake up in the morning, these are the issues that I face, that I need to solve. You know what, there's this company that can support this company, and so it's just about understanding that these guys may have the solutions to my problems. And today, because I don't know, I don't turn towards them to help me solve my issues. So I don't know if it's communication training or something,
All right.
Or
well,
something.
it's a good place to end the conversation. It's certainly something we can carry forward into 2024 with our next session in AFIS 2024. Ladies and gentlemen, a round of applause for my panel.